Hi, I'm Bert Nussbaumer from macrobeat.co.uk. I guess you all really want me to talk about GME, Robinhood, Reddit, and the lot, or about the latest sort of story of them attacking silver. But I'm a macro guy by trade and not a gambler, so I stick to all the macro things and leave talking about these Robinhood stuff to other people. This week we had a Fed meeting. Wasn't really much expected, non-event, first meeting after the inauguration of Biden. I still think that the Fed is really struggling to continue to hammer home the dovish message, given that some parts of the economy seem to recover quite well, others are a tad softer. But all in all, the market really does understand that the Fed doesn't really have many policy options left, and it's really now on the fiscal side. On the other side, last week, as you remember, we talked about the ECB meeting. It was a sort of a non-event, and early this week we had various ECB speakers. The most prominent one, the Uber hawk, Mr. Knott, talked about the level of the euro, talked about the market being wrong to underestimate that the ECB still can cut rates, and he really hinted to that if the euro doesn't sort of turn lower, or if the euro were to go higher, that they would probably be ready to cut rates. That obviously sent euro dollar lower. They're a bit unlucky with the timing. As soon as the euro started to drift lower, we start to get the very high volatility in equity markets, and the market sort of taking the focus off what the ECB said. But to me, those comments are really some of the more important ones of the last sort of many months. And I think the ECB is drawing a line, or a red line even, probably around 125. So if we were to start to go back up again, I would expect the rhetoric to get a lot sharper. So the other thing is the data surprise index, which I'm going to have a slide about it. And obviously on the geopolitics, we still keep an eye on Taiwan and Iran. Both things start to sort of bubble up a little bit and are clearly potential two flashpoints for 2021. But the first slide I have for you is the EU versus US data surprise index. What you see in here, actually, the latest data, like the weaker German IFO, isn't even on there yet, and you already see that actually the orange line is trending lower while the euro has gone up. So reality really is that index worked very well in the last sort of 1 or 2 years. Clearly, US outperforms euro data. Euro dollar is clearly on the wrong level and should really head lower, probably now held by the comments from ECB this week. On the next slide, this is euro dollar. Not a lot has happened. As we said, we took the euro just about 1% lower on the comments, but we are working on sort of grinding through this sort of area. A break of this 120.50 level will probably be the door opener for the euro dollar to really turn down. On the next slide is Aussie dollar. Again, not a heck of a lot has happened yet, maybe 1.5–2% lower. But again, we're starting to see that the Aussie is trying to put in a top. There were a few stories this week. Iron ore has started to get hit. There's stories as well that China starts to recycle metal, which actually reduces the medium-term demand for iron ore from Australia. So that sort of story that they try to get a little bit more independent from Australia continues. And if you remember, the mining economy in Australia is really what brought Australia back up again. And so I think that is a medium-term story to watch, that maybe this Aussie versus China proxy might actually reduce over time. Then we have, this is dollar yen. It seems to be waking up since this M&A story from 7-Eleven buying a US company for $22 billion. Dollar yen started to creep higher. We actually closed above the daily cloud. So sort of close, if dollar yen stays about 104.50 towards 105, there is really a chance that we could grind higher. Last but not least, the Dow, we're probably around 3% of the highs. As you remember last week, I said I see a sort of risk of a 10% correction. Can be a slow one. I'm not talking about a collapse. And just nice to see that Bank of America today come out to call of a 10% drop as well. So nice to have some company here. I still think that the equity market remains nervous, wobbly, both sides probably, but net, I really think we're going to head a fraction lower here. That is for me. Thank you very much indeed. Bye-bye.